Hi, this is Zach Meir with the Bulletin Board Heroes, which I suppose is the stock market equivalent of the shipping forecast, but hopefully more interesting. The day is Wednesday, the 21st of May, and we're starting off with the FTSE 100, which is knocking on the door of 8,800. It's actually managed to get through the old March resistance there around 8,750, and we're looking for, and have been looking for, the top of that broadening triangle from back in March last year. The top line there heading for 9,000, in fact 9,020. We're looking for that by the end of next month or even sooner. On the downside, hoping that we will be limited to the initial May resistance around 86.50, although ideally we stay above 87.50. RSI at 68, so just off the overbought area, but not actually yet overbought. But what an amazing recovery we've had from 75.44 and the tariff slump that we had last month. Moving on to the DAX, which is already in the equivalent territory where we expect the FTSE to be by the end of next month, so in well above the March peak, 23,500. Still looking for up to 24,400 now by the end of this month, especially while we remain above 23,500. Moving on to the Dow, which has been the sickly child out of the three of the FTSE, the Dow and the DAX. Here we've been trying to break that line of resistance there from February. It's not a big deal really, that line. More important to stay above the floor of the rising trend channel there from May last year, which is 42,000. Above that, we're looking for not only a break of March resistance at 42,800, but actually for this market to go back towards the initial highs of the year, 45,000, I suppose, by the end of next month, although that might be pushing it, even though we have the 50-day moving average now starting to rise, as well as the 200-day line, which suggests we're going to golden cross, and that is typically the strongest part of the cycle. So on that basis alone, 45,000 could be achievable by the end of next month, while we're above 42,000. Moving on to Bitcoin, where the hope was that this would get to 120,000 by the end of this month. I suppose it's going to be too close to call. We've got 10 days left, and while in November, I suppose we rallied $20,000-$30,000. That seems a little bit more difficult now, but it's still possible. While we're above the recent resistance there, above 106, we are potentially still looking at 120,000 otherwise. Bit more dithering in the 105 to around the 105 area is possible. Worst case on the downside would be the initial May resistance at 98,000. Ideally, we stay well above the 100,000 level, and we are now, if you look closely, probably just a day away from a golden cross between the 50 and 200-day moving averages, down there at 93,000. Next up on the list is gold, and here, although the intuitive thing was and is to say that this market is topped out, what you can see here is that we are still clinging to the floor of that very steep rising trend channel from last month, or rather from back in March. The level there around 32, let's say 32.10. Above that, we could still get up to 3,800 near term. We were looking for that by the end of this month, but I think unless there's a nuclear explosion, which I suppose there could be, 3,800 might be rather difficult, more for the end of next month. If you're cautious, you wait for a break of that April resistance line there, 3,400, before assuming 3,800 is on its way. Upside value while we're above the 50-day moving average, 31.77. RSI also back above neutral 50, which is nice. Moving on to the stocks, and rather a lot of them, probably too many of them, but rather exciting in terms of some of the nascent setups. So the first one here is Angle. Here we've got the RSI back above the neutral 50 level for the first time in months, and we're also above the 50-day line, which looks like it's ready to start rising. Looking for 12.5 or 13 pence by the end of next month, while we're above recent support at 8 pence. On to a less familiar name, or even less familiar name, which is Artisanal Spirits. And the reason for inclusion today is basically to show off, because we've almost got up to the level we were looking for, 55. Well, actually, I think we were looking for 55 pence at that line, just shy of that at the moment, but basically looking for that to be broken, and a new leg higher up to as high as 82 pence by the end of next month. Upside value while we're above, certainly while we're above the 50 pence level. Next up is a situation where we've been waiting for legendary seller to get out, and in the wake of an interview as well that was released today, we can see the shares are trying to bottom out. We have managed to get back above the initial April support there, 2.9 pence, and while we're above that, looking for 4.6 pence by the end of next month within that broadening triangle base. Next up is CapEx, which I keep looking at, even though I probably shouldn't. Here we've had a situation where we failed at the 200-day line, still looking for the top of that broadening triangle from back in November at 0.2 pence by the end of next month, and hopefully recent support of around 0.14 will remain in place. Another obscure one, Checkit, and here we've had a gap close buy signal, so the gap down there last month, and we filled that and pushed above it, 13 3/4. The longer we stay above that, the greater the chance of move to 21 pence by the end of next month. The RSI also bouncing near the neutral 50 level. Onto a stock which I haven't heard of at all, which is Diales or Dials. Here you can see that we've got a broadening triangle, top of the triangle there, up to 37 pence. Looking for that by the end of next month. Helped by the way that we've had two gaps off the low, the last one unfilled through the 50-day line, and you can see those very strong candles that we've had almost from the low, so opening at the low, closing at the high on several occasions. That suggests that even though I don't think anyone's heard of the name of the company, the shares could be heading higher. Upside valid while we're above recent support around 21 pence mid-price. Onto a stock which moves a bit every day, but never quite enough to get it included here. But what is interesting with Geo is that we're finding support above a rising 50-day line, and that tends to be a leading indicator on the upside. Looking for 0.22 by the end of the next month, while we're above 0.12, the floor of that rising trend channel from back in August. Stock which is normally relatively obscure, and you can see from the collapse that we had from September to November why it might be. Rather amazingly, there was a further leg down, but it looks as though the shares may have bottomed out. Bullish divergence coming in there, or uptrend line there, and also three solid candles in a row suggest that above £1.55 could be heading for £2 by the end of next month, which would be some comfort to the people who have been slapped on that. One of the questions of the last century was where were you when JFK was shot, and I suppose for this century it's going to be where were you when George Roach left Premier African Minerals. Here you can see that we've had the shares rather embarrassingly rising after the departure of the great man. We've got a gap to fill there up to 0.029, probably looking for up to 0.045 by the end of next month as a best case scenario. Assuming that the latest price action is a bear trap rebound from below 0.0216. If you're cautious, which you probably would be given the fundraising history of the company, you wait for the RSI to get back above neutral 50 versus 41 at the moment. See, some of the great and the good have been looking at Resolute mining because it's probably because it's a proper company, and here you can see that we've had gaps all the way up. Big gap to fill there at 33 3/4 pence, and looking for that over the next couple of weeks, and obviously after that then hoping that we'll retest the October resistance, 45 pence, maybe by the end of next month. Surface Transforms is next, and here situation looking brighter than has for quite some time. The reason we're saying that is we're in a sort of a turnaround here with a sort of hook to the upside. Finding support above a falling 200-day line, which is quite a show of strength, and really assuming that we could get up to the top of that gap there, 1.45 pence, perhaps as soon as the end of next month, while we're above the 200-day line at 0.58. Ideally, we stay above the initial May peak at 0.66, especially as that would be a better risk-reward situation. On to one of my favourite stocks at the moment, possibly the favourite, Smarter Web, and that's on the basis that almost all throughout its short history, the shares have obeyed the charting, so initially finding support at 15 pence, then at 25 pence, and now crawling up this rising trend channel based at 32 pence above that, looking for, unbelievably, up to 75 pence by the end of next month. If that happens, I will be very proud of myself and also very proud of the charting methodology used here. If you're cautious, I suppose you wait for an end of day close above 40 pence to then lead up to 75, but 75 is the big target there. Best case scenario, while we're above 32 pence. Otherwise, another test of the 25 pence area may be required. Moving along to stock with the great and the good are also seem to be on the case, which is Tiger Royalties. Here we have got a looks like a mid-move consolidation above the 200-day line, still looking for 0.2 pence, and hopefully by the end of next month. Ideally, we stay above that 200-day line, 0.11. Lots of excitement this morning at Upland Resources, where there's been plenty of false dawns over the recent past, but this one looks less false, perhaps, than many of the other ones. The good thing to do would be to have a break of the initial May resistance of 106, then the minimum target would be 1.17, the 200-day line. Best case is probably back to 1.45 by the end of next month. But the more time the shares spend above the 1 penny area, the better in this case. And we'd just be assuming recovery while we're above 0.92 resistance on the way down. A stock which has had more false dawns than the UK economy is next, and the only thing is with this latest setup at Woodbois does actually look quite convincing. There are a couple of points here. That what first is that the 50-day line is rising. Had a gap close buy signal on the 16th. We've gapped up over the last couple of days as well. Very strong candles. You can see opening at the low, closing at the high, and the minimum here looks to be to fill that gap up there to 0.09 by the end of next month. While we're above the 50-day line, 0.047. So let's see if Woodbois can finally deliver the goods. Finishing off with Warpaint, and here it was the case that the shares looked overly slammed after the acquisition news that the company had back in February. What's interesting now is we've broken recent resistance of 441. Above that, looking for the top of that broadening triangle, 555 by the end of next month. Nice RSI 50 rebound, or bounces rather, over the last couple of weeks or 3 weeks, adding to the impression that this is ready to return back to the previous dizzy heights. That's it for me today. More updates tomorrow.